Hello, my name's Mike Hodgson. I'm the CEO of Serabi Gold, and it's December the 16th. You find me at Coringa, our newest gold mine here in Pará in northern Brazil, and I'm very pleased to be joining Matt to give you an update on where we are and our year in 2024.
Look, 2024, a superb year for you guys. In fact, one of the best performers on our books, that's for sure, up 6 times since August last year. Not sure if you knew that, but you are. Look, and we're going to talk about some of the things that you've done to actually sort of drive that. It's not entirely down to just pure gold price. So maybe start off with where were you at the beginning of this year?
Well, I'm glad you recognise that, because some people say, "Oh, well, you're just enjoying the great economic tailwind you've got." We've actually made a lot of progress, regardless of that. Yes, we'll take the gold price and the wonderful exchange rate that's been very much in our favour. But we've met many milestones. We're on guidance. We're going to produce pretty much 38,000 ounces, which is bang on guidance. That's a 7,000 ounce increase on last year. We've seen the PEA at Coringa put out, which is successful, which obviously documents our change in strategy to go from 2 mines, 2 plants, to 2 mine, 1 plant, and transport high grade concentrated ROM from Coringa to Palito. That's all in that new PEA. And of course, we got our mining license renewed and while we're waiting for our LI. So de-risked Coringa as a mining operation as well. So yeah, three great events, I would say. So and it's not going to end there. We're going to enjoy a good year end. And finally, sorry, I must not forget, the implementation and commissioning of the ore sorter at Coringa. That's the main reason you find me here at Coringa today, because I've gone to come and look at it for the 2nd time this month, and it's fascinating. It's great to watch. It's brilliant. It's working so well. Really pleased.
Right. Okay. Well, multiple catalyst moments for you throughout the year, and obviously, I think you've actually sent me a little video which we'll put up when we come to that point about showing how that ore sourcing works and why that's the next sort of step change for the business and production. Let's remind people, perhaps new to the story, what it is that you got. We're talking about high grade underground mining here. So maybe just sort of talk us through what that involves and how you've actually moved the different projects through the phases.
Palito's been around for a long time, as everyone knows. It's been our core mine, our platform. That's where our process plant is. It's been a sort of 7-gram ore body. We did a 43-101 on Palito back in 2023. We're going to do a new one next year. It won't hide the fact that in all of our sort of wonderful sort of news of 2024, it wasn't such a wonderful year at Palito. We had some tough times with Palito. We had to move away in a certain area from our our successful selective mining. And when I talk about selective mining, it's the same at both mines. We actually mine, selectively. Basically, that's what it is. We're mining 0.5 meter wide veins, probably about 1 meter wide. You can't really get much lower than that. But it still means in our stopes and all of our excavations, we've still got about 50% of the material is granite waste. So we obviously installed an ore sorter at Palito, and it does remove a good part of that waste. It's not brilliant at Palito. You put it through its ore sorter, it removes some of the waste on the first pass, and then when we take the product away, but we then have to clean the waste and run it again and then run it again. We kind of scavenge the ore out of the material. It's not brilliant, so we don't use it on our best ore. Over at Coringa here, we have the same methodology. We mine as selectively as we can, where we're trying to minimize dilution by mining it, as well as we can. Very manual mining, so it is slow. It's more costly, but we are always chasing quality, not quantity, as I've always said. And when that material comes to surface, we put it through the ore sorter at Coringa, and it just literally separates the ore from the waste in one pass. It's amazing. So the whole idea is, why are we doing all this? Well, we've got a process plant at Coringa that's got a sort of 650 tonne per day capacity. And rather than just add more ball mills and scale, we're trying to mine as well as we can. And then before it goes to the mills, we're using the ore sorters to try to remove, again, as much dilution as we can. So we're sending absolutely the best product to the plant. And by doing that, a plant that could only produce, 650 tonnes per day 5 years ago at 4 grams, 5 grams, we're at 6 grams, let's say. We're trying to make that 650 tons per day at 9 grams, 10 grams. And by doing that, we can go from 40 to 60,000 ounces with no capex in the process plant. That's the beauty. Now, and that's going to be good for us for the time being. That's it. Next year, we're going to start the process of, well, what next? So over the next 2 years, stage one was to get the ore sorters built at both mines, which we've done. Stage two is to ramp up from 40 to 60,000 ounces over the next 2 years, 18 months. Stage three is to actually go beyond 60, which is going to be driven by resource growth. The two mines have about 500,000 ounces each. Great prospectivity to increase that to, I believe, 2 million ounces, double the size. Not quite sure whether it's going to be more growth at Coringa or more at Palito. That's going to be driven by the drill bit and results. But the intention is to double our resource that will support a production rate, not 60,000 ounces per year, but 100,000 ounces per year. Now, that's going to need more process capacity. So the jury is still out whether that's going to be a bigger, smaller, a new plant at Coringa again, do we go back to that idea, or do we just simply expand the Palito plant to continue with the trucking option from Palito? Nice problem to have. The drill bit and, say, exploration resource growth will decide what we do about that. But so we're going to have a very, very busy year next year with brownfield exploration.
Well, what you've also been doing as a result of these kind of step changes during the course of the year, and as you say, gold price is a big chunk of that as well. But let I say, don't write off the work done on the ground here. It gives you optionality. Money gives you choices to make, and I'm sure you'll do the studies to work out what is the most efficient thing to do in terms of whether you have another plant or build out the existing plant. That's all good. But the money side of things also gives you choices on other aspects of what you do with the ground that you've got as well, doesn't it? I mean, so tell me about the exploration plans that you're thinking of.
We just to say that I can't be too specific, but we forecast to end this year with about $8 million in the bank. We're going to end the year between $20 and $25 million in the bank. That's what's happened. It's which gives us a very, very healthy treasury. So next year we can throw, for the first time, we're going to spend $8 million on brownfield exploration. We've never spent a budget like that before. In fact, we've had various consultants and visitors come here the last sort of 3-4 months, and they kind of don't understand that for since 2013, when we reopened Palito, right the way to 2023, we did no brownfield exploration. And they were looking at data that was all done pre-2012, and they go, well, why is this all so odd? So, well, this company has been cash strapped for 10 years. And now we've got, we're still talking about the same stories now as we were 10 years ago, because we've just parked brownfield exploration. So we've got it all to play for. We've got opportunities, targets everywhere, and that's what we're going to get our teeth into with at least I was talking to the guys yesterday, 30,000 meter drill program next year in and around what I call headframe exploration around Coringa and around Palito, all to actually push for this, resource growth and ultimately production rate change beyond 2026.
What's the team look like? Because obviously you've been so focused on the kind of operational side of things. And there's been a little bit of shrink, but it's de minimis. Obviously you had your potential partner, chasing other things as well. But what are you going to have to do to the exploration team to be able to deploy at those sorts of rates? Is it a case of outsource the drilling? Manage it, or do you do that internally?
Yeah, no, we've used a consultant, the contractor here regularly. They're going to bring we're going to have 4 rigs here turning. We've got to get a bit. The team's growing already. No, we've got geophysics going on. We've got IP. We've got geochemical crews. We're going to be drilling a ton of meters. They're all contract rigs, which is good. They'll obviously come and go, but they're going to be pretty. Yeah, they're going to be pretty busy. 30 odd thousand meters. That's a lot of drilling to do. Back to the partner, that was a little bit different. That was regional exploration. Our business is looking for our core business to go from 60,000 ounces to 100,000 ounces, which is going from 1 million ounces to 2 million ounces, is looking for like for like Palito Coringa style mineralization. It's high grade production. So we're looking for smaller, higher grade deposits. That's the brownfield exploration program. The regional continues in the background, but we're not funding that. We're still looking for partners to come in, sort of value-based metal style, and we've got enough groups that are quite happy to come in. We've entered a few groups. Had meetings with a few groups that have come in, and there's interest there that they might want to come in, and they particularly want to come in and look at the Matildas of the world, the porphyry coppers that we found, and then we've got 2 other prospects. But that's not something that Serabi wants to fund, can fund, or wants to fund. Our exploration effort is for more Palitos, more Coringas, more of that. But we are, if the regional exploration we get another partner coming in, we're looking for them to fund that, and obviously how we manage that will depend on how many people they would throw at it, and see how we go.
Okay, and let's just I'm going to whack up a picture here of the type of veining that you're chasing, so people get a sense of what does it look like underground.
Yeah.
So there we go. So what are we looking at here? I guess.
Well, you can see. I think you see even the non-geological. I mean, obviously, I'm a geologist, but even but I haven't been one for a long time really. But even I can see, there's a white vein there, and there's a red waste rock. In the white, that's where the sulfides are, and the gold is inside the sulfides. There's nothing in the red at all. It is pure pink waste granite. Would look very nice crushed on my driveway at home, actually. But it would be, but it's very ornamental. And sadly, there's no gold in it whatsoever. So that material is the stuff we're trying to eliminate and get out. We mine that white vein as well as we possibly can. It's about 1/2 to 3/4 of a meter wide, but inevitably when we mine it, it's 1.2 meter wide. There's still quite a lot of pink in it. Now we want to get that pink out before it goes on the truck. So we have to truck something that's no value all the way to Palito. We don't want to do that. So our ore sorter basically removes the red. It's not, although it's a pre-concentrator, it's better described really as a waste remover. That's really what it does.
Yeah, in fact, I'm going to pop up that video now, and maybe you can talk us through it. But I wouldn't knock I did have a company come on here recently and tell me that they were going to sell the waste rock as aggregates to the local railway. That's when I knew they were in trouble. Right, so here we go. We're going to put up the video now. So maybe you can sort of talk us through what we're actually looking at, because this is the money shot, right?
Yeah, so what that material does, it gets crushed down to about 35 millimeters size, a bit less, between 25 and 35 millimeters, so that's the size. And then that basically goes up a conveyor and goes to the ore sorting plant. First thing that happens to that as it goes up the conveyor is it has to be washed. So we actually put that material through a washing plant. The reason we have to wash it is because the ore sorter, principally at Coringa, works on color. So as you can see, I have a white background and an orange top on. So if it's all covered in dust, you're not going to be able to see that color difference. So when that's all crushed, you'll simply see a crushed stone, which is red crushed rock with bits of white in, and the white is what we want and the red is what we don't want. So it simply goes into the ore crusher, into the crusher, goes up the belt to the ore sorter, gets washed, goes into the ore sorter. On the video, you'll see it shooting across the belt at high speed, and that clever piece of equipment can map whether the rock is red or white, like with a color scanner. And then essentially using a series of compressed air guns, it separates, it blows off the white and sort of lets the red fall away. And you end up with 2 piles. And, you can see in the video, the red going up its conveyor belt, which is the waste. And you look at that and there's no white bits in it. There might be 1 or 2, but hardly any. The rejects typically got a grade of 0.1 of a gram per ton. And the product, which is nearly white, it has some waste in it, but it doesn't matter. The important thing is not to lose ore in the waste. If you get a bit of waste in the ore, that's fine, because you've got a bit of dilution. But the name of the game here is we've got 5 grams per ton entering this process plant, and we've got 15 grams per ton leaving this process plant. That's what it does. and all that, and that big pile of red, we're no longer trucking. So we're going to be trucking as I've said all the way along, we're going to be trucking always a double-digit product, 10 gram plus. Now, at the moment, we're running the whole process plant at the moment on the low grade because we want to make sure it's working really well. So the results aren't going to be phenomenal straight away, but by sort of February time, we'll be passing all of the Coringa ROM through this ore sorter, and we're going to be trucking about a third of the volume, half to a third of the volume at sort of 2 to 3 times the typical ROM grade.
That's incredible. Now, talk to me about efficiency. So obviously, this is driving, I keep using that phrase, step change in the economics for you. But what are the other things that you've kind of got your eye on and saying, I think we can improve our margin?
The biggest. I'll be talking about this all year, but the best thing we can do, we can't do anything about the labour. We've got a lot of fixed costs. We've got a camp. Everyone's at camp. So we have to feed them and accommodate them. So there's not a lot we can do about that. But the next big cost we've got is energy. The good news is we've got a brand new line from grid line. We're on the grid, but our line is bad because we're at the end of the line. And by the time we get the energy, it's been used a lot and we get what's left. And we run the process plant on diesel generators because the energy is just so unreliable. The new line has been installed, dedicated to us. Well, we're the first on the new line, and then everyone after us is on the line. So that's going to be great. Unfortunately, that's been delayed multiple times by the power company, and they're now. It was supposed to be switched on the 6th of December. Every time they've tried to test it, there's been a problem. It's built, and they're just doing final tests. So we do hope in January it will be operational. That's going to save us about $2 million a year. It doesn't sound a lot, but it saves a lot of money, but it saves us some money, but it saves us a lot of grief. It means we are going to not worry about having to maintain gen sets. We'll have far less need for diesel. That's going to be a big change for us. And it's going to save us, say, a couple of $1 million a year. That's the main thing. We're going to continue to try to improve the ore sorting at Palito and we already have had more success. The last 3 months have been great at Palito. As I said earlier on, Palito struggled throughout the year, the first 9 months, but I'm pleased to say since September, with more ore sorting at Palito and sort of optimising the mine plan a little bit more, we've got the Palito grade back up to 6, and in November it was nearly 7. So that's great too. So I think really, the main efficiency is about just improving the grade going to the process plant. And in terms of capex next year, the good thing is it's just mine development at Coringa really. We've done the capex. I mean, we've got the plant built at Coringa. Coringa's in great shape. We've got a big reserve there, which is ready to mine. Palito's improving. That's why we've got the confidence to chuck a load of money at brownfield exploration and still return build the cash flow. I mean, if we run our budget for 2025 at, let's say, spot today, it's going to be very, very cash generative.
Well, I look forward to that. Just looking put it that way. But okay, nice summary of what's gone on this year. Maybe what you're going to get after next year. I mean, you're sort of looking around the gold market at the moment. It looks no sign of abating when it comes to gold price and obviously how that affects margins of producers. What we're seeing is a lot of kind of M&A activity out there. Brazil, some big moves from people like G Mining, different sort of profile in terms of the ore body, in terms of the profile of the company and some of the M&A that they're doing. For guys like you, do I just view this as a nice cash generative business, or do you expect there to be more M&A in Brazil for companies like yourselves?
I think there's a bit of both, but put it this way: we've got to do something because if we build our cash like we're building it next year on top of this year, there's no way we can do that. We've either got to be looking at share buybacks or paying dividends. If there's going to be no M&A, we've obviously got to do something to return value back to shareholders. That's a given. I think we all accept that on the board. Our 2 big shareholders are certainly supportive of that. So that's something we're seriously looking at, obviously. We're always looking at accretive, meaningful M&A, of course. We have I think now we're attractive, and we're looking at acquisitions that will work for us. And we could work for somebody else. That's it. We've obviously got to look at that as well. We're kind of in that sort of, we're still probably too small for most people. So we haven't got, and there's not a lot out there. I'm always looking at stuff that could work for us. Now, there's nothing yet which I really want to commit our cash to. I think it's better spent on our organic growth, really. That's really, you've got to rank this always. There's certainly nothing in Brazil at the moment. I think we've got great opportunity in our backyard at the moment. But as I said, we're always open to a willing participant if the right sort of M&As came along. But nothing on the horizon at the moment, certainly. And we're very happy to follow the go it alone strategy.
Well, look, Mike, I know you've got a morning for you there. You've got to get on and get in front of the team. Appreciate your time. Thanks for dialing in all the way from Brazil. Great year. Well done to you and the boys. Lots more of that, please, next year, if you don't mind.
Very much hope to provide that. Thank you, Matt.